But we start off with that Fed-fueled rally on Wall Street. All three major indices closing near their highs of the day after Jerome Powell said the central bank could slow the pace of hikes. The S&P jumping 2.6%, the Nasdaq soaring more than 4%. And check out some of the individual names surging today. Alphabet, Microsoft moving on the back of earnings. Both stocks posting their best days since April 2020. But then after the bell, Best Buy warned, cutting guidance for the year as it sees weaker demand, with Apple reporting tomorrow. May not be a good omen there. Will today prove to be a bear market mirage? Guy.
Hi, Melms. Well, you got to listen again. Let's go back to June 15th. The last time we heard from Chair Powell, the market rallied. The next day, the market got whacked on the back of the Swiss National Bank. But collectively, we said, you know what? So much pessimism. The market's probably going to rally into Apple earnings. Thought 4,100, got close today. I'll stand by that. I think today was the day that, it's going to sort of culminate with this Fed meeting talking about slowing the pace. Good luck with that. I think they have as much chance of that happening as any of us here on today's panel have at winning this now billion-dollar mega million. So I think the market's done what we thought would it do. I think today is a day that has exhausted itself, and we'll see what happens with Apple tomorrow.
I feel like whatever the Fed says, it's sort of like beauty is in the eye of the beholder. Hawkishness or dovishness is in the eye of the beholder. Tim Seymour, how did you interpret some of these comments? Because to say that it may be appropriate to slow hikes at some point, well, yeah, at some point he's going to slow hikes. And also the notion that joblessness, it may not be a huge increase. It may not translate into a big jump in joblessness. I mean, that's a good hope there.
It's a good hope. Look, I interpreted it as a dovish Fed, and the dovish pivot that I actually was concerned the market had priced in too much of. They got the Fed downgrading the economy. They got the Fed talking about weaker conditions, possibly weaker spending. That was what everybody wanted to hear. And then if you look at the Fed fund futures, we probably priced down 10 to 15 basis points as we got into 23. You're now around 315, 320 as you get into March, April of 23, and you're basically flat from the end of the year. So the market is clearly thinking the Fed is on pause. Look, let's be clear. I mean, 225 basis points this year is aggressive, but a Fed that really has given you some sense of that they need to continue to put their foot on the pedal. But they also told you in no uncertain terms that they're a bit concerned about the economy. So translate. Look, we've talked about semiconductors. They were the biggest beneficiary, up almost 4.7% today, are now up almost 22% in 16 sessions. And the market has rallied 11% off of those floors. Do you feel comfortable with the economy based upon earnings and ultimately, therefore, putting the market down, 14, 15% from all-time highs on the S&P? That's the big question here, because we've had a big bounce back, and I'm not sure it's all over yet.
Was this a pivot in your view, Karen? Was this a possible pivot? Was this the prelude to a pivot? What was it in your view?
I didn't, you opened it by saying you heard what you wanted to hear. It's sort of that Laurel Yanni thing. I heard hawkish. I heard inflation is very concerning. I can't imagine that they are on autopilot to get to neutral rate regardless of what the data shows. So I think that if we see hot inflation data, I think they're going to continue to be hawkish. And I think that's okay, because I think ultimately they need to get a handle on inflation. And I think I heard Powell is pretty concerned about that, and that he sees that as job one. I don't think he sees preventing a bumpy landing as the most important thing. It's a byproduct. So I heard hawkish, and I think that's kind of okay. I think the Fed having credibility is a good thing.
Dan, how about you?
Yeah, I mean, listen, I think the Fed is going to do what Guy says they've already done, but they're going to do it again and again and again. They're just going to keep painting themselves in a corner. Their inability to kind of really recognize the fact that, the tightening or the weakening of economic conditions, right, by the tightening of financial conditions is clearly going to put us in a recession if we're not already in one. They obviously have a look at the GDP, and they know that it's not going to be a negative print tomorrow, or at least Q1 is going to be revised up. So that's just semantics here. But the idea that they're somehow going to avoid some sort of economic downturn, and then they're going to be able to thread the needle by some sort of pivot. After Tim just said, it's the fastest increase of 2.25 points in Fed funds history here. It just doesn't seem likely. So I guess if you're chasing the stock market right here because you think the Fed's going to pivot in the fall and we're going to start to get rate cuts next year or sometime early next year, I just don't think that's a great way to invest right now. That being said, some of the things that rallied the most today, maybe they do feel like they're a little bit overdone to the downside. Maybe valuations are starting to make a little more sense, especially if you don't think that rates are going so much higher. I mean, listen, there's a lot of people who feel like rates have to go much higher, mid-single digits, to get to where inflation is. I just don't think that's going to happen because of all the debt that has been accumulated over the last few years or so. So to me, I don't know. I don't really think this is something you want to chase. We know the history of bear market rallies here. I suspect this is what we're in right now.
But if this is truly a pivot, then this may not be a chase, right? I mean, isn't this the big signal that investors were actually waiting for? This is why we saw we just had a screen of high multiple stocks that did really well in today's session, because we are to believe that there's a pivot in store and that rates on the long end are going to be contained. Then this is your ticket, right? It's the all clear. Tim, I'll go to you, since you do believe that this was a pivot in some way, shape, or form.
Yeah, I don't think you can dispute that what happened today. I mean, the market said that the Fed's not going to be as aggressive as we thought they were. The market peaked in terms of rates on June 17th, the last Fed meeting. And we've come in by almost 70 basis points. Well, on some level, it doesn't matter, because I'm not going to tell you that I think the Fed is going to take their foot off the gas. I'm going to tell you that the market has interpreted, and they got enough today to bring this sense that the Fed is, again, they talked about spending, they talked about the dynamics in the economy, enough to have people believe that those that thought that the Fed was going to break something, that in fact maybe they won't break something. And I'm not telling you that's right or wrong. I'm not telling you whether they said today that they're going to pause. I don't think they're going to pause. I don't think they should pause. I'm just telling you that the market for 3 weeks has rallied mostly, not on earnings, on the sense that the Fed had seen the peak of some inflations on the good side, and that we were getting enough economic data to also tell you they're going to have to ease up a little bit here. That's what the market tells us. Mm-hmm. And we saw that clearly today.
One doesn't necessarily preclude the other in terms of it being perceived as a pivot, it being time to rally, but it also being a rally within a bear market guy. So where do you stand on how the market is reacting?
Fascinating. Well, I think it's done what we thought it would do. I mean, if you just go back and listen to some of the things we've said for the last sort of month and a half, I mean, it's somewhat coming to fruition. It's gotten there in sort of weird ways, but here we are. I think this is what I think. I think 10-year yields going lower in this environment is a bad thing. I don't think it speaks to a robust economy. I think it speaks to a slowing economy. I think an inverted yield curve is probably a bad thing. And I think a Fed that's potentially going to pivot is going to be a bad thing, because the inflation that they're trying to combat is just going to get right back out there again. Again, listen to the Walmart call, and I think it tells you all you need to know. Inflation is first and foremost, Karen said it, and if the market goes down, that, to me, is just collateral damage at that point. I think they accept that. I think they're probably thrilled that the market's gone high over the last month. I just don't think it's going to last for very long.
You know, there was something interesting that Jay Powell said during this news conference that really struck me, and that is this notion that he said in the second half of the year, the economy should be okay, effectively, because there's so much money on people's balance sheets and there are many job openings out there, which is sort of working against him, Karen, in some way, and makes that battle against inflation so much harder in terms of trying to put enough grit in the wheels of the economy to slow things down.
Yeah, I was actually a little bit confused by that. So I agree. I didn't know exactly what to make of that. I think, I mean, I don't know if the number of job openings ends up changing, because we see a lot of layoffs, more anecdotal, not everywhere, but or if more people come into the labor force. I don't know. I was a little confused by that. But one thing I want to say, though, is that I think they still have inflation as job one, but I also think inflation is coming down. But they're still very, very far away. Both things could be happening at the same time. Mm-hmm. That inflation is coming down and the Fed needs to raise. Yeah. And I think that is what they will do.